Hi there, this is the first in the series of short videos looking at aspects of financial instability and financial crises in both developed and developing countries. And in this short video we're going to identify some of the different types of financial crisis that can exist and give you some current contemporary examples for your notes. So there are in fact several types of financial crisis. I think we can make a distinction between six, and sometimes of course they're interlinked, they're interrelated. So a currency crisis happens when a country perhaps is running a fixed exchange rate system and that currency valuation becomes unsustainable in the foreign exchange markets. In other words, traders decide that the official fixed exchange rate is no longer sustainable and they start to put significant selling pressure on the currency. So a currency crisis can happen when a currency goes into free fall. It loses a lot of its external value. And a good example at the moment is Turkey. The Turkish lira has fallen by more than 20% against the US dollar in the last few months, and some experts are thinking there could be a full-blown currency crisis as we head into 2017. Linked to this is the idea of a balance of payments or an external debt crisis. Now you need to understand the balance of payments for A level, in particular the difference between the current account and the financial account. And a balance of payments crisis essentially happens when a country is running a big current account deficit but is not able to attract the capital inflows that are needed to finance a current account deficit. The result can be that their foreign exchange reserves collapse and fall to dangerously low levels, and that means the country may be in need of emergency financial assistance in the form of a bailout. And a really good example of that at the moment is Mongolia, which has just been bailed out by the IMF, the International Monetary Fund, partly because there's been a fall in world commodity prices, and that's something that Mongolia depends heavily on. A sovereign debt crisis is really another phrase for government or national debt crisis. And this is where governments build up levels of debt because of their fiscal deficits, which mean that eventually the interest they have to pay takes up a huge proportion of annual tax revenues. Indeed, a government may decide it cannot afford to pay the interest on their existing debts, let alone take out some extra debt. Now, clearly, Greece is foremost in terms of the examples. Greece has had 3 bailouts since 2010, the most recent involving a substantial bailout from the ECB, the European Central Bank, and the European Union. A banking crisis typically happens when there is a loss of confidence and a collapse in trust in a nation's banking system, when the banking system becomes fragile and people no longer rely on it for their savings. This can lead to, for example, depositors desperately trying to take their money out of ATM machines and perhaps moving their money out of a fragile banking system in one country to a banking sector in another country. And 2 really good examples: the Italian banking system has been bailed out by the European Central Bank and the EU, and a couple of years ago Cyprus had a significant run on banks, which led to banks having to close and restricting withdrawals from machines. A household debt crisis is also an example of a financial crisis, and this is when the level of household debt, be it mortgages or money borrowed on credit cards and personal loans, becomes a significant and sizable share of national income. And I think one could say that if one goes back 10 years prior to the crisis, global financial crisis, the United States and the UK both had huge levels of household debt, in part because of a boom in house prices and a significant rise in mortgage lending. So those are 5 examples of individual types of financial crisis. And you could also make a case for saying that there is a broad concept, a broad financial crisis that actually brings together, combines many elements of all the above. Argentina, for example, had a huge economic and financial crisis in 2001, which led to a partial default on loans. There was an emerging markets mini crisis in 2013 to 2015. China has been through some significant financial turmoil, particularly in 2015, and fears that may happen again in 2017. There was a broad financial crisis in Mexico in 1994. Lots of East Asian countries suffered this in 97, 98. Russia has been through periods of turmoil. Latterly, Brazil has been experiencing financial instability. So you can make a case for saying that actually financial crises are becoming more common. And that's partly because the financial sectors of many economies, both developed and emerging, have become bigger relative to the size of GDP and more complex. And so therefore one can make a case for saying that financial crises have become more frequent than they were in the past. And this of course raises important questions for policymakers. So this has been a brief introduction to the different types of financial crisis that you might want to study as an economist. Look out for separate additional videos in this series on financial instability.